Okay. Welcome. Good morning, everyone. Let's do this. Right. Hope you're all well. Let's a little higher. Good morning. Now, I hope you all had a nice weekend. Financial. I sure did. Let me get this up. I'm pretty sure I've paid for this now, so I'm just gonna log in here. See if I can get in. How was everyone's weekend though? Or last week? Do you guys take any trades? I sure had a little bit of a chiller time last week, more going through things, but there's some good opportunities. We actually went through some. Yesterday I was trying to finish off my investing blog, so I'm going to start to, towards the end of this day, get a link so you guys can get this as like a newsletter every single week of what things we discussed. So this one is the investing one, so we discussed a bit about FTSE 100, a bit about revenue, keywords that go into the balance sheets, because as time I want to be able to go through someone's, a company's financial statements and we all understand what is going on, so then we can make good investments. One sec, see if this is it. Right. Just gonna get this up. What's that you have? Okay. Give me a sec, 1 second, guys. I'm just trying to log into Financial Times so we can actually read the front covers, dog. Ah, there you go. Alright. Okay, nice. Let's see if I go here. Here we go, nice. Okay, so we'll have a little bit of a, obviously it's an early morning, so normally the charts aren't moving too much yet. So I know I like to look and delve into the Financial Times just before. I wonder if I can make this a little bit smaller for us. See if I can. Here we go. So this is this morning, isn't it? The 27th? Yeah, it is. Okay, let me get used to doing this. Now, where's my TikTok? There we go. So it looks like, yeah, I've been reading a lot last night about Trump, and the start of his presidency has been pretty interesting, eh? It's going to be very, very interesting to see. So it looks like, yeah, a lot of this EU issues with climate change is interesting. Obviously, Trump has just pulled out of the Paris Initiative, which is leading to a little bit of a pretty bad waters there. So Trump deregulation spurs critics, and this is something that I don't really like in Trump's regard. I don't like the fact that he is, he's coming out of these initiatives which realistically bear no weight to any financial gain apart from the people who own the oil and the gas companies. That's my only issue. It's not in America's best interest to do that. I think it's a bit silly. But he's done it, and he's done it straight away. So that's going to be quite an interesting one. So we'll go through this 1 second, and then we're going to look at the charts over here. Labour dusts off plans for Oxbridge. What the hell? The decision to back Oxford-Cambridge Arc makes a return to political favour for a scheme that was shelved 3 years ago. After then, Conservative Prime Minister Boris prioritised levelling up poorer regions. Interesting, very, very interesting. I mean, it's going to be such an interesting time in the UK. I'm excited to see what it brings us, So we'll continue reading this later on. Let me get into the charts over here. Let's just look at our day as a whole and see what we plan on getting. So first things first, as we always do, we'll check the Forex Factory. Let me just go here. Yeah, so let's take a look at Forex Factory and what we expect for the rest of this day. There we go. So we had some China non-manufacturing PMIs that came out in Asian session, but it looks like in terms of today we don't have much power news. You have new home sales, that'll be interesting to see. Any nice number of new single family homes that were sold in the previous month. For the US, that's at 3 o'clock, but realistically there's nothing else here that's going to really affect the pairs that we are working on, so that is great. Let me just check my... Yeah, I've noticed recently I definitely 100% need to get another monitor. I've got 2 monitors, but I actually need this third one. There's too many screens. Okay, so yeah, in terms of news, not too bad, which is great. In terms of the whole week, though, let's take a look at the whole week. On Tuesday, we have consumer confidence, which is going to be interesting. The level composite index based on surveyed households, expecting an increase, which is good for currency. But yeah, throughout this week, we're going to delve down into a couple of things that I want to focus on. One of them would be the FTSE 100. I want to look in the UK and to see why we are at an all-time high rate of the FTSE 100, but the actual standards of living in the UK are significantly decreased or, worsened in the last years. So why is it that our stock market is doing well, but our overall standard of living is not? Okay, and this is what we want to delve into this week. So Wednesday we have FOMC. Wow, FOMC statement, which is going to be good. Obviously we've got some CAD news, so quite a big news there. Jan 30th, we've got quite a lot of money. We've got the financing interest rates. So again, what did we speak about last week, guys? What did we speak about last week? This is the bank rates, okay? This is the Euro banking system rates. They previously have had 3.15%, okay? 3.15%. Okay. Then it was 3.3, 3.5, 4. So they've been gradually taking it down. It got to an extreme highs because of inflation after COVID, but it looks like they are gradually pushing it down, and they expect again another decrease, which means Euro's inflation. 1 second, let me just get this thing. So Euro's inflation, European inflation. Now, I suppose the one thing that I want to ask there is this number, is this just the whole of Europe? In December 2024, the annual inflation rate in European Union was 2.7%, which is slightly higher than the prelim month rate of 2.5. So it looks like, if it's around 2.7, looking like they're probably trying to get to around about 2%, which is exactly what the UK is doing. It's just the UK is fucked compared to Europe. But yeah, looks like it's helping, right? So interest rates they're putting down, which means that less people are going to be saving, more people are going to be spending. which is good. Again, we go to what we discussed for here. If I can find it. Let's just make this clear in our heads, right? We'll go to our economics page. So let's just really deep it again, because sometimes you need a refresh, right? Where is it? Yeah. So, interest rates. What's the connection? Inflation directly affects interest rates set by the banks. So, for example, higher inflation is higher interest rates, because inflation is the increase in demand. So, when inflation rises above targets, I always think, remember inflation as, you know, if there's enough supply, then you can charge more money. Obviously, that's not the overall case for inflation, because sometimes there's other factors, but it's the best way to acknowledge what's going on. So inflation rises when there is an increase in supply, in demand, and therefore they increase. The higher interest rates will try and help reduce the demand, because people will be saving money instead of spending. So if inflation is too low or there's a recession, central banks will lower interest rates to encourage borrowing and investments. Yeah. So obviously, in terms of the EU and also the UK, current growth is not the best. Inflation was a little bit high. They're reducing this, and they're trying to reduce it to 2% because they want to make sure that people are still spending money and not holding it in. Yeah. Again, same with America. Interest rates will be 4.5. It's looking like they're expected to keep the 4.5% rate, which is fine. What is the US inflation rate at the moment? As of December 2024, the US inflation rate is 2.9. Yeah, so they're trying to get to a target of 2%. It never normally hits 2%. It's normally will be around about that area. So not bad. Okay, cool. So we've got that through Wednesday, which is obviously a big day. Thursday, obviously, we have the refinancing rate of Euro, advanced GDP. So we're looking to see GDP for US, also the unemployment claims. Very, very interesting news. See what goes on there. And then Friday, obviously, you've got core price index. That's about inflation. How much of the change in price of goods and services purchased by consumers. Looking like a little bit of an increase there. So yeah, not bad, not bad. Very, very interesting this week. Lots of news to delve into. Now let's take a look and see what we have going on with the charts over here. Let me get this EMA. There we go. Okay. So last week we discussed how Goldie is. It's not Goldie. GJ is in quite an interesting realm here. If you take a look at the monthly time frame, the previous monthly candle closed bullish. This candle's made a lower wick. It's rejected 190, which is the support. So it looks like, you know, you've got 4 days left, potentially maybe a reflip and continue bullish. It looks like as a whole we are bullish, right? You can see here we've made a high, we then made a low, we made a higher high, higher low, higher high, higher low. So overall bullish, you'd say, on the higher time frames. Weekly time frame, we closed bullish. It looks like we are in a bit of a range between 198 and 189. Obviously, it's a huge range. But it actually looks like the candles in this range are pretty nice. Daily candles, obviously previous one closed very, very bullish. Why can't you ad blocker app detected, brother? Yes, I know it's an ad blocker. It's because I don't want your fucking ads, bro. I might have to change it for this site. And obviously in recent times, let's actually get the indicator that I like on Asian range. Go 948. Oh my god, you have to buy everything now? What the hell, brother? Okay, I won't be having that then. So what time was this at then? 1:30. We came back down. Asian session pushed back down, and then we've actually made supports pretty quickly here. Let me start writing some things on. So on the 4 hour, you can see we've made some support here. Let me whack this on. Not 4 hour flip, sorry. Just the 4 hour line, 4 hour support. And you can see from the left hand side previously here, we've had quite a lot of 4 hour support / resistance here as well. Can you see? So if you look to the left hand side, price is held here, price is held here, price is held here. So our supports here, and then also resistances. So looking at buys, you kind of want to be in a little bit of a you're in a little bit of a risky position right now. Why is that? Well, think about it logically. First thing, this 4 hour candle has no bottom wick. And the reason why I say that is if you look around all of the candles, 85 to 90% of all candles have a top wick and a bottom wick. So there's 80 to 90% chance this candle is going to flip that candle, okay? And therefore, taking buys would be a little bit silly. But that's not the be all and end all, right? Also, you need to remember, we're at resistance. So taking a buy at resistance is going to be a little bit painful. It's going to be a little bit harder for you to get a nice trade because of the fact it's at resistance, right? So do remember that. Let's take a look then. So if we did continue, where else would the daily candle probably push us to? Well, for me, the daily candle would come to this next resistance, which is up here. Why? Well, because previously we did, right? After we broke up, we got to this resistance. Same here. So this is the next daily resistance. So I'm going to put this down and make it a yellow line because I still like my yellow and blue lines. So in terms of looking at a little bit lower time frames, let's take a look and see what we have above. Yeah, so you can see once you start looking at the hourly, a lot of resistance here. Okay, you can see we tap it here, hold it very, very well. This is like a little order block here, which held nicely. Yeah, so that's most recent times. So definitely later on, what you'd probably want to see is obviously price coming back above this zone to 800. 194, 800, closures potentially above, and then you've got some nice clean candles. You can see here we pushed all the way down, pushed all the way down. So this zone could be quite nice to refill back up to that daily resistance. So yeah, that would be definitely a zone I'd look to have a look later on. Zone of interest. But as I said, this candle here, oh, can you fuck off? I'm gonna have to buy this bloody. Let's see if I can take this as the ad blocker off. I'm gonna pause on this site. There we go. See if I can pause on this site. There we go. So if I redone this, it should be good. So yeah, it looks good. Very, very nice for later on. And again, as I said, guys, that strategy that I've been looking at in recent times, still backtesting it. I think I'm through to March now. And once I get the whole year, if it's profitable, I will be taking them. So let's take a look then at Goldie. Oh, look at Bitcoin. Sorry, I'm getting distracted. Look at Bitcoin. Bitcoin's starting to reduce here. I saw yesterday that the global liquidity started to reduce. I think people are still a little bit cautious with Trump. You need to remember, Trump, you know, he's all good at, you know, causing a stir, but he's also a little bit outrageous sometimes. Like at the moment, he's having issues with, I think it's Colombia, isn't it? So if you go to the US, yeah, this. Secretary of State freezes contracts around the world fulfilling executive order for Donald Trump. But he's coming for... Target becomes the latest big UK company to end diversity initiatives. Ooh. Yeah, has anyone in the chat tried out that DeepSeek, the Chinese AI? Be interesting to see how it works. Apparently, it's much cheaper, which is going to be interesting. Even authorized the China, the US economy still accounts for 1/6 of global output. Wow. I've seen that thing. I need to look at tariffs later on as well, because tariffs are quite an interesting one to deep into, I think. It'll be interesting to see, because people are saying that tariffs, I need to learn a bit more about tariffs, that the US people will still be paying for the tariffs, because obviously they'll just offset the costs, which will be interesting to see. Anyway, let's get back to gold, and then we can have a look later on. So gold, looking like we're still at pretty much all-time highs. Wow. So what do we always know about gold? We know that gold is a safe haven. Gold is where people put their money when they're not too comfortable with what they're seeing as a whole. Daily candle, though, has broke previous daily lows, looking like it's rejecting off this resistance. Daily time frame is bearish. Obviously, the weekly candles close bullish above, so expect it to make a lower wick for then maybe a reflip later on. Obviously, this week is a significant amount of news, which can cause a little bit of trouble for people. In terms of the hourly, let me get out this. In terms of the hourly, obviously, previously we had a lot of resistance around this level. Let me go look on the 30, see if it's easier to see. Yeah, here. So 2,761 seems to be the current resistance that's holding price below. And then in current times, you can see right here, there's been some supports, but there's also supports a little bit rangy, but a little bit supports down here as well. It looks like if you got above 2,757, you could maybe go back to retest the resistance at 61. That's a 60 pip range. Obviously, buys above 2,762 would be even nicer, which would be nice to see potentially. Let me look at the. If you were to come further below, there's some levels here, but yeah, I mean, it looks like Asian sessions pulled back down at Goldie as well, and GJ also had a little bit of retracement, so interesting to see. So what I want to do for today is I want to look at, where's my drive, see if I can find it. Yeah, so this week I want to look a little bit more about the investing model. So last week we looked at the FTSE 100, but there's something that I really want to take into consideration about looking at the FTSE 100. What is the weight? So what I learned is the FTSE 100 is obviously the top 100 companies, but in the UK, but it's weighted. So what are the current weighted percentages of the FTSE 100? Because I actually didn't know this. It's quite interesting to see. Same as S&P 500. It's not split evenly between the companies. Let's see if I can find it. Yeah, you can see here. Let's see if I can ask ChatGPT. What is the weighted averages of companies? Maybe that's the wrong word. What I mean is how much percentage of each company is Yes, bro, good to see you back, Tulio. Hope you're doing well, my man. Okay, so is the market capitalization of the company, is the total market capitalization of the FTSE 100, okay. So it is based on how big the company is. And if you look at the... So it says here, Shell is 28% of index market cap. Damn! So you can see that a lot of the FTSE 100 companies... let's see if we get a... Let me look a little bit further down. Are these the top 100? I think they are, yeah. In order as well, yeah, it is. Look at EasyJet down there. Now, it looks like quite a lot of these are quite negative, eh? So, what I want to learn is, right, if you look at the FTSE 100 price, why is it that if you look at the graph, we are, if you look at the 5-year or the 1-year, we are at an all-time high, but why is the cost of living so bad? And I think the main thing is, obviously, this is not an indicator of purely the UK, because a lot of these companies that are in here are actually multinationals, right? They work, you know, forever. HSBC is the bank, obviously, but you know they do a lot of things outside of the UK. Unilever is obviously a massive company across the board. It looks like overall, though, in the recent times, there is a shitload of negatives. And another thing that we need to look at as well, last week we discussed Apple stock and potentially how they could have a little bit of a reset. They are actually doing their financial statement soon. When is Apple's next financial report? I'm pretty sure it's like tomorrow. On 30th, it's on Thursday. That would be an interesting day to see. First quarter results. And that would be a big indicator of how December has been. That'll be interesting to see. Another person as well recently that I've been watching, I'd recommend anyone to go watch his channel, is Gary's Economics. He's really good at explaining just a bit more about
Welcome to Gary's
how things work. And I think the main one currently is how much a government, can use their debt when GDP is starting to raise. The only issue that the UK has right now is that we're not growing at all, which makes it a little bit harder for us to spend, and therefore I think Rachel Reeves is going to have to cut the spending because we're spending too much. But make sure to go follow Gary's Economics. He's class. Really good. So you can see, as I said before, 4-hour candle it's looking like it's going to make that lower wick pretty shortly here, and that's what we saw before, because most candles have a lower wick and a top wick. The next what's it called, the next trading strategy that I'm looking at is all about top wicks and bottom wicks. It's all about them. So let's run through some of our things that we want to do this morning. We want to look at the GDP and debt. So let me get ChatGPT up here again. What is the relationship between GDP debt? The good thing about it now is you can literally learn everything from ChatGPT. It just tells you it. It's great. Excessive debt can burden future budgets with interest rate payments reducing. Yeah, so it's all about the bond rate. So we currently know that the bond rates in the UK are pretty high. UK bond yields. So what this figure means, is 4.64, is how much it costs the government to borrow money. Obviously, it's pretty high. But normally you can offset that with oh, I need to see. Let's look at the year. Yeah, I mean, look at that increase. Why do bond yields increase? Example, UK has increased recently. When you say next strategy about top and bottom wicks, what do you mean? Well, currently I'm backtesting a strategy where I'm only looking, obviously paint the picture of where we're going in the day, what we're looking at in terms of price, but getting into trades where they don't have top wicks and bottom wicks and expect them to flip, because there's an 85 to 90% chance they will flip, and therefore that's a good probability to have, right? It's a good probability to have. Yeah, so the issue with the bond rates currently is that obviously interest rates have been increasing as time goes on, and then now they're starting to decrease over time. The reason why they increase is just to combat inflation, because inflation was getting a bit bigger. But people then who have those bonds are wanting more for their money, because they're not getting enough if obviously interest rates are a little bit higher. High inflation erodes the return on bonds, yeah. So if you have a 5% bond but inflation 6%, you're losing. So investors demand higher yields to compensate for the lower of the purchasing power. In the UK, persistent inflationary pressures, including higher energy costs, have pushed investors to expect higher monetary policy and higher yields. If a government issues a large volume of bonds to fund spending over covered deficits, the supply of bonds increases. To attract investors, the government may need to offer higher yields. In the UK, rising borrowing needs, partially due to spending pressures and debt costs, have contributed to higher bond yields. Yeah. So I think one thing to remember is that because the pound is so low, it means the bargaining power with the pound is not good at all. But it means it increases foreign investment funds. Because people in other areas who've got who understand that the UK has a weaker pound, therefore they can buy assets at a lower cost, right? So it increases foreign investment, and that's why you start to see why the UK 100, the FTSE 100, is doing well, because investment in those companies and different assets around the UK are increasing. But that's not helping anyone who's a normal person here, right? Is it this similar to the strat you used to teach? Yeah, it's similar. It's not far off. It's just lower wicks, mate, and top wicks. There's loads of examples. I'll see if I can try and find one in recent times. Let's see if I can find one. So I've only been backtesting it on gold, and currently it's at 50% profit in the last in 2 months that I've done it. So it's not a bad one. It's not a bad. And the good thing about it as well is if you're getting in on the top wick or the bottom wick, it means that you get quite a nice trade running after as well, because you've got obviously the discounted level. You're getting in at a much nicer level. So yeah, it's an interesting one. The government can't keep the borrowing high, especially when the interest rates are so high, and therefore they've got one option basically, which is to reduce spending, which is the whole what the government want to do. They want to spend. Reflects the load of higher interest rates, inflation concerns, increasing government borrowing, and global monetary. While this is a natural market adjustment, sustained high yields can have broader economic implications, such as a higher borrowing. Yeah. Interesting. So coming towards 7 o'clock now. So just to give you an example of one trade that would be nice. This 15-minute candle doesn't have a top wick. The 30-minute does. Now the only issue for me and why I probably wouldn't have taken this trade on my sim is obviously this 4-hour has no bottom wick. That's one of the things, but also because you've already hit resistance. I never take a trade if we've hit resistance. But if we hadn't have hit this resistance yet, this is a trade that I would look to take because this candle's got no top wick. Obviously now it's got 2 minutes left. But what I probably would have done is took my trade hitting this level if it had, again, if there's no resistance, but also if it had enough time in this candle. Because if you need to think about it, this candle has 1 minute 43 seconds left to flip that candle. If you look at the 30-minute and the hourly, they don't have top wick. Sorry, they already have top wicks. So it would only be based on the 15. Therefore, you've only got 1 minute 30 to flip. It's very likely it's going to close without a top wick here. So yeah, use your initiative, but it does work. It really does work. In 2024 January and Feb, it's worked pretty well. Some days there'll be nothing, but one or 2 days in the month there'll be like 3 or 4, and it's pretty nice when it's trending. It's pretty good. Right, I'm quickly go to the toilet. I'll be 2 minutes. Yeah, and the reason why I'm looking at this strat as well is because it gives you an easy way to get out. It gives you an obvious way to get out when the candle closes when it's got no top wick. You'd close. So for example, if I was in this 15-minute buy and this candle closed, I would have just closed here and I would have gone break even. So a lot of the times when it doesn't work out, you're actually getting a break even anyway, which makes it pretty easy to do. And also in the next stream, I think probably on either Thursday or Friday, I'm going to do a real life example of the cars. You know, when I discussed about financing a car and how it can be financially crippling, I'm going to go through in a full diagram with all the variables and see what the actual cost of it is. Because the whole reason why I want to do these streams now is to learn together about everything. Oh, there we go. The US has paused the tariffs. He was going to do 25% in the first week and then 50% in the next. He's going guns blazing. So 4 hour has rejected on GJ. Daily candles made the low wick. 4 hours made the low wick, as I said. And Goldie is chilling. To be fair, it wouldn't surprise me if this week gold is going to have some big movements with all that news that's coming out. It's going to be pretty wild. Let me just have a look at this. Like how low we are, man. 1.2. I remember back in the day, man, we get like $2 to the pound was nice in 2010, I think it was. Now we are, you know, our bargaining power is pretty sour. It's not good at all. So let's see if I can find S&P 500 weighted percentage for each company. Ah, here we go. This is what I want. Is this from here? Okay, this is good. So what I want people to learn today, if you take anything from the stream, is obviously I'm looking to invest, and I still have been for a numerous amount of years. But one thing to take advantage of, and also remember, is if you look at the S&P 500, right? These are the top companies. Obviously, you've heard of a lot of these. Now, one thing that's really interesting is the weight, okay? If you look at all of these weighted, you can see that in the first maybe 8 companies, you could even say the first 4, look how much they weigh. So I thought when you're investing in an ETF, you get it distributed pretty evenly throughout, but it's not. It's actually the top companies. Obviously, it's based on how much they're bringing in, but you can see in the US, a lot of the techs, the tech companies. So we've got Tesla, we've obviously got Google, we've got Meta, Amazon, Microsoft, Apple, Nvidia. you can see if you add these weights up, that actually, if you do this, 2, 4, 6, probably 7, 11, we've got 17, 21. So you've nearly got nearly 30%. 30% of your total portfolio is actually in the only 7 companies, and all of them are in tech. So if they have an issue, if they have a time where they're struggling, you're going to see a significant, decrease in the value of the S&P because of how weighted they are. Whereas if you look at these ones further down, where some of them are not tech companies like Visa, Costco, Netflix, you can see that they're only like weighted 0.8%, very, very low amounts, which makes it interesting to see if tech does struggle. You'll see quite a significant decrease in S&P, and that's happened over the years quite a lot of times. So GJ has started to bring some volume in this morning. It's only 7 a.m. It's only quite early. Already starting to see a change. Yes, I saw that Trump is trying to tell the Middle East to reduce the oil prices. Yeah, we nearly had, in the UK, we nearly had a blackout because we didn't have enough. If I type this on here, is it UK blackout? Yeah, we nearly ran out of energy, and therefore we had to pay for it. And it's like, mate, this is why you can't just depend on sustainables all the time. We need some bloody some power stations, like nuclear ones. We've got so many islands. Just whack it on an island, man. How low will UK government bond yields are off to a volatile start to the year? So look, what did we discuss before? The bond yields are high because the spending is high, and therefore, interest rates are high. The reason why interest rates are high is because they're trying to battle inflation, because inflation is high, right? So for people that owned government bond yields, they're needing a more lucrative interest rate because inflation's high, right? And therefore, that's why the bond yields are increasing. So that's why it's been volatile. After rising sharply in the first 2 weeks by roughly 0.3 percentage points for 5-year gilts, they have now returned to where they started. While there is noise around fiscal policy, the moves have largely been driven by global factors. US bond yields have exhibited similar volatility. Okay, so it's across the board. The fiscal policy, by the way, is what Rachel Reeves has came out with. If I discuss this later on, we can go to that. The moves have largely been driven by global factors. Yeah, we know. Bond markets in the UK may be more sensitive to fiscal credibility following the turbulence after the 2022 Liz Truss budget. But fiscal sustainability in the UK does not significantly differ from some peers, including France, which has a higher fiscal deficit and more rapid. So what is higher fiscal? So, fiscal deficit occurs when a government spends more money than it earns in revenue. Okay? So, again, they're just going into debt. The deficit is financed through borrowing using by issued government bonds. When this gap between spending and revenue increases, the fiscal deficit is higher. Okay, so this is the whole issue with current UK politics. So it's the total government expenditure minus the revenue. So obviously, you know, a Labour government always wants to invest in public services, social programs, all that kind of jazz. But when the revenue, when the GDP, when the growth is not significantly higher, they struggle. You can struggle to spend because you're just crippling yourself, right? So look, the cause of a higher fiscal deficit is the increase in spending of public services, the decline in revenues, and obviously external shocks can play a factor. So, implications of a higher fiscal deficit stimulates growth. If the government borrows to fund productive investments, it can boost economic growth in the short term and medium. Yeah. Higher spending during recessions can deeper economic contractions. Negative impacts. Increased borrowing means obviously increase in debts. High government borrowing may raise interest rates, making it more expensive for private business to borrow and invest. So this is the whole issue with the right and the left. The right is saying we need to fund all this kind of stuff. The right is saying, well, that's okay, but if you're making the interest rates higher for us, it's going to slow growth, and that's the whole thing we don't want to do. We don't want to slow growth. You do these fiscal kind of policies when you're already, you're making money, when it's growing. If financed by printing money, high deficits can lead to inflation, eroding purchasing power, again, which is what we don't want to do. And the whole issue currently is that foreign investors are putting in their money into the UK because they know it's cheap. But we don't see any of this because it's obviously foreign investment. So, how do you manage a higher fiscal deficit? Spending cuts. And this is what we expect Rachel Reeves to do in March when she has to look through them. She won't do it before because it looks too obvious that it's a pain. Obviously, increasing taxes is what they want to do. Boosting GDP growth to increase tax revenues and reduce the deficit as a percentage of GDP. So that is the main thing. You can spend a lot in terms of increasing the debt if the GDP, if it's a reasonable percentage of the GDP. If it's exceeding the GDP, then you're really fucked. Refinancing existing debt to lower interest payments. Yeah, so there's a lot of issues there. It'll be interesting to see. Where the hell is this line came from, bro? Where all these lines came on? I swear is oh, was it maybe this one I was on? Yeah. So coming down now, looking like GJ maybe getting to 500. Obviously the 4 hour close bullish. Still got 2 hours and 44 minutes left, still got a lot of time. And daily's just sorting its lower wick out. Hello, Gabby. Hope you're doing well. So let's just read this again. The UK remains an outlier, however, on the other side of the policy ledger. The Bank of England policy rate of 4.75% is now the highest among large developed countries. That is weighing on activity. Economic growth has stagnated since the summer, and labour demand has fallen sharply. Inflation has eased in the past year and is now in the 2-point-something range, which is good, close to the BOE target of 2%. It is no surprise then that at its December meeting, the BOE repeated its intention to lower its policy rate ahead. Unlike many other central banks, the Bank of England has not provided clear guidance. Estimating the equilibrium rate where monetary policy is neither tight or loose requires a great deal of humility. It depends on the factors affecting the supply and demand for capital, which naturally change over time. High growth companies attract more investment, encourage less saving, pushing rates higher. Markets expect long-term interest in the UK seems high. Productivity has only increased by 0.5% annualized since the pandemic began, slightly below its pre-pandemic rate, and less than a third of that in the UK. Wow, less than a third of the rate in the US. Activity may even lower owing to ongoing issues. Yes, it's also saying the fiscal rules that the UK are doing potentially looks like they can backtrack, which is what we expect them to do. The UK borrows money at a much higher interest rate. That is its underlying economic growth rate, worsening debt dynamics. Yeah. I get that all. If you guys have any questions on all this stuff, I'm happily go through different terms. What's this one here? Move fast on plan to restore animal spirits. US investors tell Keir Starmer. Animal spirit. Animal spirit. The US owner of Birmingham City Football Club said the UK can unlock a wave of unbound investment incredibly quickly if the government makes tangible progress on its pledge to speed up planning approvals. If things change by just a small amount, there'll be a lot of capital inflow and a lot of excess growth. So he's saying he's actually ready to put some investment in. It's just the waiting time is too much. Yeah, what's that one? So it's GDP divided by, and then it's interest rates. Okay, so GJ is coming down here. Has anyone took any trades this morning? Anyone had a little look? Only 20 past 7. Still has quite a lot of time. This GJ here is continuing its downfall. Analysts expect Tesla to underperform Musk's forecasts. Well, we know that Musk can be sometimes a little bit of a cheeky liar when it comes to predicting numbers. Yeah, it's interesting. Like I always find it really interesting now is where to put our money as a whole now. It's very, very hard to see because everything's so high. I find it really odd that gold is so high. All of the US and UK stocks are so high. Crypto is high. So it's like, oh my god, something has got to burst. Something has got to show some weight, and it would be interesting to see which one goes first. That's going to be the key. Because we can't all be high. We know from a long period of time that gold is normally high when, you know, other areas are struggling because you put your money into gold when things are not looking as good. I want to look at more gold articles, but there just doesn't seem to be any. What UK economists think to say about the UK's outlook? High government and commercial. Yeah, but households will not feel as much better off as wage growth will slow and rising unemployment will fuel anxiety. Meanwhile, inflation will linger, stability above 2%, limiting the scope of the Bank of England to cut interest rates as business feels the effects of rising taxes. There are thoughts of nearly 100 economists surveyed by the 50 about the UK economy in the year ahead. The clear consensus in that Britain would continue to lag the more dynamic US economy, and GDP growth would be slow to avert the need for the government to raise taxes again later in the Parliament. What's this? So, GDP would be slow to avert the need for government to raise. Yeah. Yeah, it's interesting that our government that are trying to help the lower paid workers, this is not helping them. Increasing the minimum wage and increasing employment regulation will damage more and more people who are at the margins of the labour market. I would therefore expect an increase in employment to be muted and for this affect growth. The issue is that the UK doesn't produce anything. We don't produce anything anymore. We just basically, our whole institutions that are doing well are just looking after rich people's money, which is not the best way to do it. We don't make anything ourselves. Yeah, and look, higher employment costs, namely because of higher employment national insurance contributions following the budget, will make firms less willing to invest, therefore undermining productivity. Yeah, it's not looking good. It's not looking good, bruv. So what do we know so far? We know that the FTSE 100, the S&P 500 is not based, it's not spread through the whole companies, it's actually weighted. It's more weighted on the large companies at the top. For example, S&P 500 has nearly 30% in tech stocks, and they're the highest stocks. The UK has a high FTSE 100 rate, but you need to remember as well is that we don't add into inflation. So when inflation's high, it actually does better for the FTSE 100 because price, money is not as worth as it used to be. So it kind of gives a skewed view of what you're actually looking at. Like if we look at what's the return? What's the return in the FTSE in the past year? 11%. So inflation's been, nearly 11% for some parts of the month. And the interesting fact is that definitely the relationship between the pound and the FTSE 100. So the FTSE 100 lost ground on Friday to end the week in the red, despite having posted several record highs in recent days. London's blue chip index pointed 63 points to finish the day, partly because of the rise in the value of the pound following stronger than expected UK economic news. Many of the companies in it are internationally focused. So look, many of the companies on the index are internationally focused, meaning it typically has an inverse relationship to the value of the sterling because you're doing things away. The private sector growth edged up. So let me ask ChatGPT this. Why is the FTSE 100 inversely so because it focuses on external companies. So many companies, the FTSE 100, generate a significant portion of their revenue and profits from overseas. These revenues are typically earned in foreign currencies like US and Euro. When the pound weakens, the value of these foreign earnings increases when converted back into sterling. This boosts the reported profits and revenues of these companies, often leading to a rise in their share prices. When the pound weakens, the value of these foreign earnings increases because obviously when they convert it back, it means they're making more pounds. When the pound strengthens, foreign revenues are worth less in sterling terms, which can hurt the reported financial reports of these companies, putting downward pressure on their stock prices. So that's why when we have a strong pound, the FTSE should struggle because of the foreign kind of support we've been using. A weaker pound makes UK exports cheaper and more competitive. Yeah. Benefiting FTSE 100 companies with large exportation operations. This can increase demand for their products. Conversely, a stronger pound makes UK exports more expensive because they can't get more, they don't get enough value for their money. When the pound weakens, international investors may find UK assets relatively cheaper in their own country. This can lead to increased demand for these stocks, driving up their prices. So that's the thing. That is the disparity between wealth inequality, right? Because the UK is struggling right now in terms of all aspects, but it's cheaper for foreign investments. So they buy FTSE 100, they make the money off holding those stocks. Yeah, so FTSE 100 is weighted towards multinational company sectors. And these are all the main ones. These companies derive most of their revenue from abroad, making the index more sensitive to exchange rate movements. Yeah. So the FTSE 250, which includes more domestically focused mid-cap companies, tends to have a more direct correlation with the value of the pound. A stronger pound benefits domestic businesses reliant on UK customers and reduce import costs because obviously they can use their strong pound to buy assets and things from different countries, which is cheaper for them normally. One sec, Dart. So this is quite interesting, and it actually makes it a little bit more of an interesting opportunity here. So if I can ask, does the FTSE 250 hold the 100 same 100 companies as the FTSE 100? What do you guys think? Put it in the chat. Put it in the chat. is FTSE 100, obviously the top 100 companies, is FTSE 250 including them 100 as well as another 150, or is it just the 250 after the 100? Let's take a look and see. I think it's the, yeah, does not include the same companies. So that's good. That makes things a little bit easier to see. So if I look at the FTSE 250, these are more right, why can't I find FTSE 250 on here, bruh? I was doing this. Yeah, look, year to date. This shows a this shows a much easier. So year to date is 6%, so it's 5% less than the 100. Obviously this year so far it's minus. In the last 6 months it's minus 3%. Oh wow, when was this? Jan 15. Holy fuck, we had a massive bearish market here. Look at that range. Let's take a look at the companies then. Yeah, look, Trainline, Trustpilot, very much UK based. But then again, it's easier for foreign investment, so you got to also take that into account. The reason why I'm doing all this is because I'm just looking to see of where to put my money at all times. Because I think once we start to do this all day and we start to gain a pretty good knowledge of what to do, when things hit the fan, you know where to put your money. Be a little bit easier to see. Okay, so GJ is coming back down over here to 540. It's got 26 minutes left for the 8 o'clock candle. If it breaks that 4-hour low, wow. We're really going bearish to start off this day. And gold is just making this new weekly low wick. Maybe retest the previous res for maybe later on. This is good though. That once you start going through this, we're understanding like these articles are making more sense. Look, employers are cutting jobs. Someone put in the chat right now, why are employers cutting jobs in the UK? There's one major reason. It actually says it here, but because of the tax increases. It's because of the national insurance per employee has increased. For a £30,000 worker, it's an extra £1,000 you got to give to the government every single year. So employers are cutting the jobs to obviously offset that risk, which is so obvious. I don't know why the government thought that was a good idea, to obviously reduce the cost, but also they'll be raising the prices of their goods to offset tax increases, which is the whole issue behind inflation. Inflation could increase because of this, because they're offsetting the taxes. With wages still growing too fast for policymakers' comfort, yeah, so the wages are increasing, which makes it just overall costly for a company, which means it has less probability of growing because there's just more. In the 20 years since you set up a chain of coffee shops, the business climate has never felt as difficult as it does now. And this is the thing. I don't mind a government that puts, money into the public funds, but you can't do it when we're struggling, when the growth is fuck all. We need to get to a point where we're making enough money, we're growing at a good rate. Then you can start to reduce the taxes. Increase the taxes. But don't do it when we're already struggling. $127,000 rise in a tax bill in April through prices alone. Just getting jobs, closing a cafe and making a long-standing manager redundant and asking part-time workers to work longer hours or leave. Since they will no longer fall below the threshold for employer national insurance contributions, it's not what we want to do. Yeah, that's not good. Yeah. How best to respond to the tax and the wage increases announced by Rachel Reeves. So you're squeezing these companies, and obviously the government are wanting the companies to pay more money, but it's not about this. It's about taxing the fucking wealthy, the really wealthy. The 10 million plus mark is what you've got to be taxing, and I don't know why we can't just obviously tax their assets and not the person. So this is the this is the Purchasing Managers Employment Index below 50. A majority of business reporting a contraction. So this is actually in our Forex factory. Manufacturing PMI went up a little bit. See if I can find this. Public sector net borrowing. A difference in the value between spending and income for public corporations, the central government and the local governments. An increase of 6 billion nearly. Oh my God. And obviously with that 4.8% interest rate, that's quite a lot of borrowing. See if we can find this. Can I put like a filter on? Filter. Here we go. So interest rate still 2.5%, reduced from 2.6. That's good to see. GDP again is absolutely abysmal. Retail sales really down. So this is why I'm looking at putting some shorts potentially on. Companies that deal in the retail space. So, I mean, that's everything in terms of, you can look at supermarkets, look at retail stores like clothing brands. They'll all should be seeing this struggle. So I've actually already got a couple of shorts on them. Yeah, this is it. Where is it? Claimant count chain. No, what was it called? It was called the Purchasing Managers Employment Index. Maybe it's just called something different here. So the base is the 50, and we're below it. So a contraction in the number of staff. Last week, retailer Sainsbury's said it was axing 3,000 jobs from its head office to its store cafes, while an executive at Associated British Foods, owner of the low-cost fashion chain Primark, said people were starting to buy fewer clothes because of worries about job security. Because obviously, companies are offsetting that because of the budget that Rachel Reeves has done. But despite such wage growth has accelerated, data last week showed private sector earnings grew at an annual pace of 6% in the last 3 months. Again, this is because the foreign investment, the pound is weak, and therefore it's cheaper for foreign investment, which is all well and good, but it doesn't help anyone who lives in the UK, and it's just been bought up by big multi-glomerates. Next is that it's increasing minimum wage has having a rippling effect on pay higher up in the scales. If I look at Next, like this, that's a great one. Next share price. Yeah, I mean, look at that. Year to date, minus 4% already. So again, London's going to save the chart. London gonna save the charts tonight. We'll see. But you know what I mean? Like this this is what I want to get into. I want to look at more. I want to make sure that we've got all the information, and therefore I can make executive decisions to put shorts on. I've already got shorts on a couple of companies, but I want to make sure I'm doing this all the time, because actually trading currencies is all good and well, and it's interesting, whatever, but it's not as interesting as the companies. And being able to look at where to get in. So if we look at the next one, where did the next go? Where is their next share price news? On Friday, what was it? Next latest financial results. So it was in January. They still have a lot of shares. So what I want to do in the next sessions is, again, start going through annual reports again. So reading all these, because this is interesting for me. I find it really, really interesting to see. So we'll probably do a couple of case studies on a couple of companies. One would probably be Next. I think that's a good one to look at. One will be Apple. We'll try and do that maybe tomorrow, so we can get ready for Apple's annual statements, which will come out on the 30th, first quarter, sorry. So it's interesting. What I find really interesting here is, obviously, it's not discussing about inflation. So even though it looks like there's been a 5% increase on the profit before tax, right? Interest rates for the last year have been, what have been UK's inflation rate, sorry. Inflation figures. See if it's got a graph. So can you see here, if we look at the last years, which is what we've been doing, or maybe last 3 years. So this next to here is saying Jan 2023 to Jan 2024. So if we look at Jan 2023. So Jan 2023 was here. Jan 2023, inflation was 10%. Then it was 10.4, then it was 10, it was 8.7, 8.7. So if you go through the average from Jan 2023 to Jan 2024, which is here, The lowest inflation rate, the lowest inflation is being 4%. The rest of it, look how high it's been. So what they're trying to do in their annual reports here is show obviously an increase, but they're not putting in their statements anything to do with the inflation, because it'll look horrendous, right? If you look at the average over that time period, it's probably right around the 7-8%. So inflation is 7-8%. Their change is 5%. So actually net 2% down. But again, with these statements, they don't want shareholders to be scared. So they don't need to give you the whole picture. They're trying to dumb you down on this. So profit before tax is 5. This is 3% ahead of the guidance of 9.15 given in January, largely due to better than expected clearance rates of sales stock in January. So when is their next? This is 2024, right? So when is the next? Next financial statements. Because it looks like it should be coming out pretty shortly, right? Because we've got Jan 2024, but we don't have next financial statement is Jan 2025 release. Q4 trading statement. Ah, look, this is all the websites for all of the companies. That is not next, is it? This was because it's called next. It's a bit annoying. Oh, there we go. This is it. In the 9 weeks to 28th of December, full price sales went up 6% versus last year. This number is slightly flattering by the time of the end of season sale. Adjusting for this effect, underlying full price sales were up 5.7%. The overachievement adds 27 million to price sales. Group profit before tax forecast is 3.6%. That's before tax, though. Share buybacks forecast 3.1%, resulting in pre-tax 6.7%. So I suppose what you'd want to look at as well is also where they actually operate as a whole. Reduction in net. And they still give it out. They still give out dividends every single year. They don't, which is an interesting one. So yeah, we'll break some of these down. I want to make sure we know everything. Well, I want to know everything before I take investments. Well done. Hello, Dennis, my man. Hope you're doing well, brother. I'm going well. I'm going well. I'm very, very good, brother. Oh. Very, very well. Time flies, man. It's been so long. It's been very, very long. But back to it. Again, I want to put some spins on it. I want to be doing loads of different things, but oh, appeal approved. My TikTok. Let's see if I can redo this. Yeah, because when I realized, I was like, I want to diversify in everything. I want to learn all about the economics, because once things, you know, once things make complete clear sense, you can then make some good economic judgments on different things, and that's what I want to be able to do. I want to be basically, what I want to do is I want to trade 10% of my income a month, like add 10%, and then I want obviously 30% of it to be in ETFs, some in crypto. I want to diversify in every aspect. I feel sometimes you get so worked up in your own life that you don't put all of your eggs in different baskets, and the more baskets you have, the more diversified you are. And I just want to get to that point where I've got loads of different things going on in terms of investments, because the more you understand it, the more you can make conscious decisions. So yeah. So we've got 7 minutes left for 8 o'clock candle to open. So I think the other thing that I want to ask is, why is the pound... Oh. There we go. We're back. Let me... I want to know... There we go. Why is the pound struggling? Oh. I don't want to caps you, boy. Is the pound... struggling? Let's take a look at these. So if the UK economy is growing slowly or contracting, the pound can lose value as investors perceive weaker economic prospects. Okay, and that's directly affecting internal companies as less than the multi-conglomerates that go everywhere. High inflation. Persistent inflation combined with sluggish growth can undermine confidence in the currency, yeah, because obviously you're losing money on the inflation, but also because you're not growing, the economic prospects are not looking as enticing. Central banks use interest rates to control inflation. The B of A raises rates less aggressively than the other central banks. The pound may weaken because investors favour countries with higher returns on investment. Yeah. So if they give you the money, and that's true. If you actually, if remember back in the day, like we look at all, we look at the pound's news, and the Bank of England never really increased the rates more than 25 points. It's normally 25 points. They never go any higher, which means they combat it in such a small way, and therefore people are not as maybe confident in it. High inflation erodes the purchasing power of the pound, making it less valuable in real terms. Yeah. High inflation can also hurt consumer spending and economic confidence, further weighting on the currency. And then there's obviously the fiscal concerns, which is what we're currently going through. So yeah, an example, the Conservative government, they that little mini budget that Liz Truss did, it proposed an underfunding tax cut. So again, it goes both ways. You can't be cutting taxes and not being able to fund certain aspects, triggering a sharp sell-off in the pound as investors lose faith in the UK's fiscal responsibility. The UK often runs a trade deficit, importing more than it exports, and a current amount of account deficit spending more than it earns. This means the country relies on foreign investment to balance the books. A weaker pound can reflect concerns about the UK's ability to attract enough foreign capital to cover these deficits. Yeah, so there's a shitload of why they're so low. Okay, we got 3 minutes. But yeah, I'd highly recommend getting onto Financial Times. You can get them. You can get like a free version, which is pretty good, but you can also get the paid one. They all seem to be worthwhile. Just being able to know everything that's going on, you understand it a bit more, and therefore you can look at trades in a bit of a different way. I think what I want to know is, because there's both sides of the argument of the trading tariffs. If the US increase tariffs on a country such as Mexico, let's say, what impact does that have on an American? Because I've been seeing a lot of people saying actually it's going to affect the Americans just as much as it is on them. Increased prices. Tariffs are essentially a tax import. When tariffs are imposed, companies often pass these higher costs onto consumers, leading to more expensive products. If tariffs are applied to cars, fruits, or vegetables imported from Mexico, Americans may see higher prices at dealerships and grocery stores. So it's not inherently a good thing. Reduced purchasing power. As goods become more expensive, consumers may have less disposable income to spend on other items, slowing economic growth. Mexico may respond by imposing retaliatory tariffs on US goods. This can hurt American exporters, especially those in agricultural manufacturing. So they could do the same. Could face job losses. Higher tariffs can contribute to inflation. That makes sense, right? Why does it contribute to inflation? Because of what they put later on. If you increase the tax imports, then they're just going to increase the price of their goods, and therefore there's less demand because the goods are increasing in price. If tariffs make Mexican imports more expensive, US customers and businesses may have fewer affordable choices for certain goods, for example, fresh produce, electronics. But I think realistically, he's not using it to actually, gain any financial interest. It's more just saying I'm the boss here, which is definitely what Trump would do. So it is 8 o'clock now. Looking like we're going to see maybe the final push to the 544 level. And potentially the 4 hour may break in the previous low. Let's see. But realistically, if you look at every single chart, I mean, if there's a clean zone to get back down to 530, it should get to it. You could look at the short on the break of the low, stop loss above maybe here, 50 pips. Obviously, if you close bullish, oh my god, damn. Someone's getting a good R there. To potentially to fill back to zone, 18 pips is not bad. The only issue you'd have with this trade is that the 4-hour candle obviously has support in previous areas where it's rejected. But it'll be interesting to see if you get down to that low. So, Goldie here has been trending bearish. Now, this candle's already made. Can you see here? It's got no bottom wick. No bottom wick. And it already ran up. Yeah, not too much, really. Now, to be fair, 15 pips is normally what I've been looking at on my simulation sessions. We've closed below as well. So for me here, a potential sell would be nice. Let's see. So let's just say when you got the push up, you took the sell here. Stop loss would be above the previous resistance, which would be here. And then what I would do is look to fill this previous zone. Now what I would do here, once we've reflipped this candle, okay, for me, am I back testing what I've done is when we flip and we break the low, I'd go break even now. Because now we're making the bottom wick, right? And therefore, the trade only makes sense to go break even because that was my probability of getting it, right? The hourly no bottom wick. And now it does have a bottom wick. So you got to see it and wait and see if it holds. It's a good retest as well from the previous level. And then I'd probably get break even. Yep. But those little opportunities, I tell you, they sort. I'm telling you, they can be pretty good. No. Let's take a look at TikTok. Hope you guys are doing well on TikTok. Hope you guys are doing well. So there we go. Made the lower wick. But I'd say a lot of these trades that I take on the back test and with gold. When there's a trending market, man, the amount of top wicks it makes with no bottom wicks is sick, and you can get in and get the whole drive, which is nice. And the L's, and there's not many of them, especially when you make the logical decisions. So, like, you might go to me, Max. For example, this candle here had no low wick. Would you take a sell here because it had no low wick and you expect it to flip? And that's unequivocally a no, because we're bullish, right? We made a low, we made a high. We made a second low, so that's with the direction. If this candle here, or maybe this candle, made a lower wick, tap this resistance, and it's got no top wick, I'd take a buy there, stop loss below. That is normally what I do. Let's get this filter off. Yeah, that 5-minute bearish was nice here as well. Great rejection off that high. So yeah, the tariffs do not make. I mean, a lot of the tariff conversations and the way why it's so big in America is the fact that these fucking rednecks think, yeah, let's just make it all in America. It's like, yeah, but there's a lot of parts that are not made in America, brother. and that could be quite damaging. Well, this is quite interesting. Ah, look, so this is a good example. So, looks like Japan is also struggling with the higher bond yields, and therefore they're looking at foreign investment. They're putting their money into some other places. So, it's a good example of where investors will not be investing in their own country and they're looking elsewhere. And this is what we'll be doing as well. Benjamin need to be buy safe foreign debt. Interesting. And there you go. There's GJ, Bob's your uncle. If it's the start of the month, which it isn't, depending on how the month is currently gone, I'd probably close there. If I'm having a good month, I potentially would actually hold this to see if it can break. But for the most part, I'd probably just close at that support if we weren't. We know it's a support, we know it could potentially hold. There's your 18 pips for the morning. Bob's your uncle, Fanny's your aunt. Tap right at the support, dog. But nice clean structure. Look at these candles, man. Really, really solid. These are market conditions that I love to play with back in the day. Very, very clean, very obvious. Reject the highs. Should come back down to support. Bob's your uncle. And you know, from now on, from here on, it's like, well, where could it go? Well, it could hold support, and then it could continue back up into this range again. But again, take your money out where it makes logical sense. I think at one point as well, I want to look at more Asian stocks. Because it's always a growing economy. Especially, I mean, India would be interesting to see. Maybe get into the depths of Asian politics, Indian politics and economics would be another thing that I want to do. So it looks like definitely later on there could be some nice gold buys if you get above 2,762. That would be a pretty easy realm. So 4 hour potentially maybe breaking the previous 4 hour low. Where would be the next zone for it to come? I mean, probably back down to this support. And if you're going to close, you're back in the zone. I mean, this zone is quite clean as well. Not bad at all. The US Federal Reserve is not expected to cut interest rates on Wednesday, but the central bank policy is already under scrutiny from incoming President Trump. Expect the Fed to hold rates at a current level of 4.5 of these 3 consecutive cuts in September. Since September. So yeah, so this one here is slowing inflation, solid job growth. It means do we even need to cut the interest rates because they're actually not doing too bad. If the Fed wants to send us further hawkish signal in January, this sentence could be modified. The elections comes from Trump. We demand the interest rates drop. He actually maybe wants a federal pal out, man. No. Okay, so some bullish volume coming on Goldie here. Again, it's still, if you look at the 4-hour time frame, it's still very, very much bullish. It's made a good wick to the downside here. Some good volume coming in. These movements are so big, man. I remember back in the day they were so small. 58 pips already. Holy mackerel. See how this 15-minute opens. This 5-minute has no bottom wick, so expecting this 15 to probably pull back. Let's see in 20 seconds time. Nice W here. Yeah, GJ's hit the support. Very nice. So, overall, this stream we've been going, for the most part, a bit of investing, a bit of economics. Next stream we'll probably go for a little bit more crypto. And I want to go through that car analogy again, just to show people the real benefit of not buying a car on finance. So I'll do that today. So, GJ is about to break 4-hour lows, has broken 4-hour lows, really rejecting off this resistance. Overall, you can see, looking like we're going to come down here. Daily candle, bearish. Have you got a Wanda? A Wanda looks a little bit easier. But I'll keep on this one for the meantime. Now we know, around about 400, we have another support, which is down here, which is here. So it'll be interesting to see how we hold, or if we hold, let's say. Again, though, another thing, right? So I discussed previously about potentially getting into this trade here. Where was it? I think it was here. Back down to support. But what you've got to remember is if you took your positions here and you took your money off and you were happy with it, jobs are good. But if you then continue, don't be thinking, oh man, I should have held this trade. You've got to make the conscious decision to go, no, I'm happy with my money, jobs are good. And I didn't want to leave a runner to break this low because I didn't think it would, or, you know, never ever ever go and, oh man, I need to hold this next one on, because genuinely you'll just be holding things forever and never getting any profit out of the markets at all. That's the one thing that I did for a while, which was a little bit annoying. You would hold trades on hoping it would be a massive winner just because you want to show people you've got a massive winner, and realistically nothing really matters apart from making money through the month. But the strategy that I'm doing right now is, it makes sense. So basically what it is if I hit like 10-15% for the month, or, you know, halfway through the month, which seems to be happening quite a lot, then what will happen is, when I've hit that target, I'll then, for the rest of those days in that month, I'll start to run more trades, because again, I've already made my money for the month. If I get into a trade, I'm just going to leave it a little bit longer, and therefore it's just an extra bonus in the month. It's an extra bonus. This is looking good. This is looking good. Gold is rejected off support. Nice London volume. But what you need to do is make sure that this 5.8, you get a little bit past it. But it's looking like it's going to. There we go, hit next support on GJ. If you're on TikTok as well, make sure to go landscape. You'll see the whole screen. Portrait's a little bit ass. Could make it look a little bit better as time goes on, but cannot be bothered. So I'll wait till 9 minutes. I'm going to see this candle open, see if we can get maybe a lower wick. And then I'll leave you for this day, and we'll come back tomorrow. So I'm just going to get my little notes up. So I want to look at the next financial statements and go through each of the words. So for example, up here you can see total revenue, profit before tax, basic earnings per share. I want to break down terminology. I want to see if any of it is discussing about inflation as well, because inflation for that year was fucking 8% on average. So a growth of 5 for me seems a little bit unreasonable. This is one of the words I want to know. EPS. I think I've gone through it before, but not as much as I'd want to. Did we go through it here? The earnings per share, yeah. I'm assuming EPS is just the net income minus the preferred dividends. What is EPS? Net income minus the preferred dividends divided by a weighted average number of common shares outstanding. Okay, yeah. Do this for Apple numbers, please. I love it when like ChatGPT farts a little bit. It kind of gets a little bit slower. It needs to refresh. Net income, preferred dividends, weighted average standing outside. It's 500,000 shares of 1.8. Okay. For the fourth quarter of 2024, Apple announced salary down from. These figures indicate a modest decline in Apple's per sharing earnings over the past year. Okay, so the shares are going down in terms of value, and that's why we're seeing this. But also, it's because of the overall consensus. iPhone's bringing a large chunk. iPhone sales volume as signs of plateauing consumer demand emerge under its service segment, which includes Apple Store. It's looking slow growth compared to its previous quarters. Yeah, so it's very slow, which is why I have a short on gold on Apple. Sorry, Apple shares are down 40% from their 24 high, and the Ukrainian call could have set the stage for how Apple stock moves into these key risks of revenue growth, competition, and macro externals. Yeah. We will see. Three minutes left for. So this is definitely an area where if I get this candle to make a low wick without a top wick, I'd definitely be looking to take a trade, because we've pushed the bullish volume. Overall, we're bullish anyway in terms of structure. So get the low wick and see if it pushes. Okay, 2 minutes left. Let's see. Seconds left. Let's see. Twenty seconds left. So like for this example here, you can see GJ's got no top wick. I would not be looking to take a buy to get this flip because we're bearish, right? So only if it's the other way. And no bottom wick for that example. Wicked, right, I'm going to leave it here, guys. Thank you so much for coming on. I really do appreciate it. As time goes on, we'll make this stream a little bit more easy to follow. I know it's all over the place, but I'm just getting used to what I want to bring. But yeah, thank you so much for coming on. We'll see you in the next one, and I'll see you later. Peace out, guys. Peace out.